Nvidia just reported the most extraordinary earnings in semiconductor history. Every single metric was a record, and the stock fell. Today, I'm going to explain exactly why and what every investor needs to understand right now. Revenue of 81.6 billion. Data center up 92%. EPS beat. Gross margins at 75%. Q2 guidance of 91 billion, above estimates. This was Nvidia's 22nd earnings beat in the last 24 quarters. Jensen Huang said these exact words on the earnings call. The build-out of AI factories is the largest infrastructure expansion in human history, and it is accelerating at extraordinary speed. The CEO of the world's most important chip company just told you this is bigger than the railroads, bigger than the highways. Data center revenue hit 75.2 billion, up 92% year over year. Look at this chart, 4 quarters of steady growth. Then the final quarter nearly doubles in a single leap. That is the Blackwell chip ramp hitting at full speed. Blackwell is Nvidia's newest AI chip, replacing the previous generation Hopper chips that powered the first wave of AI. Blackwell is 5 times more powerful. It handles memory at 8 terabytes per second, and it uses 25 times less energy per AI task. Every major hyperscaler is replacing their existing Hopper infrastructure with Blackwell right now. That is what created the revenue explosion. The customer mix is fascinating. 50% of data center revenue came from hyperscalers: Microsoft, Google, Amazon, Meta. The other 50% came from AI cloud companies, industrial customers, enterprises, and sovereign governments. A year ago, that second 50% barely existed. Nvidia is no longer dependent on just 4 customers. Here is the number buried in the report that most investors missed. A year ago, China data center revenue was $4.6 billion in a single quarter. This quarter, 0. Nvidia shipped 0 data center chips to China due to US export restrictions. Think about what that means. Nvidia grew 85% despite a $4.6 billion China-shaped hole in their revenue. Without export restrictions, Q1 revenue would have been 86.2 billion and growth would have exceeded 100%. Now here is why the stock fell. This has happened 4 consecutive times. The stock rises going into earnings, then falls after the announcement. February fell 9% after a beat. August fell 8% after a beat. November fell 4.7%. May fell again. 4 beats, 4 declines. Here is the exact mechanism. Weeks before earnings, institutions start buying. The stock rose 14% in the month before May 20th. Retail investors see the rise and pile in expecting a pop. Earnings drop. Numbers are great, but already priced in. Institutions who bought early now sell to lock in gains. Retail is left holding the position. The street expected 78.8 billion. Nvidia delivered 81.6, a massive beat. But the stock price had already risen to price in something closer to 85 to 87 billion. When reality, even great reality, came in below what the stock had priced, the correction followed. Here is something almost nobody talks about. Nvidia trades at 21 times forward earnings. Broadcom trades at 31 times. AMD trades at 42 times. ASML at 35 times. Nvidia, the best growing company in the group, is actually the cheapest on a price-to-earnings basis. The valuation argument against Nvidia is weaker than most people think. Beyond the earnings, Nvidia announced an $80 billion share buyback, the largest in semiconductor history, and they raised the quarterly dividend from 1 cent per share to 25 cents, a 25 times increase in a single announcement. This is a company so profitable it can fund the largest AI infrastructure build-out in history and return $80 billion to shareholders simultaneously. Q2 guidance of $91 billion. Think about that trajectory. 68 billion in Q4, 81.6 in Q1, 91 billion guided for Q2. Nvidia is on pace for a $364 billion annual revenue run rate. For context, Apple's entire annual revenue is about 400 billion. Nvidia is approaching Apple's revenue from just one segment. One major bear concern before earnings was that Blackwell's manufacturing costs would compress margins. The bears were wrong. Gross margins held at 75%, matching the previous quarter exactly. Nvidia is ramping the most complex chip in history and maintaining the highest margins in the semiconductor industry simultaneously. Operating income hit $53.5 billion, up 147% from a year ago. Nvidia employs approximately 32,000 people. That is $1.67 million of operating profit per employee per year. No company this large has ever generated this level of profit efficiency. Jensen Huang spent significant time on the call discussing what comes next. Physical AI, robots, and autonomous systems running Nvidia chips. Sovereign AI, governments building their own national AI infrastructure. Industrial AI agents. Every new category of AI adoption creates new Nvidia chip demand. The GPU was the first wave. Agentic AI is the second. Physical AI is the third. The bear case always mentions competition. AMD, custom silicon from Google and Microsoft, Qualcomm. Here's the honest competitive assessment. AMD has 18.6% GPU market share, but the ROCm software platform lags CUDA by years of adoption. Google and Microsoft's custom chips are primarily for internal use. They still buy massive amounts of Nvidia hardware. There is no credible near-term threat to Nvidia's AI GPU dominance. But here's the question that every serious investor needs to answer before deciding what to do with Nvidia right now. Here is the real answer. The business is extraordinary, but expectations are running faster than even Nvidia's extraordinary results. Every time Nvidia beats, analysts raise their targets higher. The bar rises every quarter. Nvidia has to keep accelerating just to meet the new expectations. When you are growing 85% and the market expected you to grow 90%, you disappoint even by delivering 85% growth. Now the historically important part. Every single one of the last 3 post-earnings dips was a buying opportunity. After the February dip, stock recovered 18%. After November, recovered 22%. After August, 15%. The pattern is consistent. The question is whether this time is the same or whether something has fundamentally changed. 3 scenarios for Nvidia from here. Scenario A, the business delivers $91 billion in Q2. As guided, Blackwell continues ramping. Analyst targets of $950 to $1,200 prove achievable. That is 50 to 80% upside. Scenario B, growth decelerates but remains strong. Stock is flat to up 20%. Scenario C, hyperscaler spending pauses. Margins compress. Stock corrects 20 to 30%. Which scenario you believe determines everything. The analyst consensus, 62 analysts cover Nvidia. 0 say sell. The average price target clusters between $950 and $1,200. At current prices, that implies 50 to 80% upside if the consensus is right. The last time analyst consensus was this uniformly bullish on a single stock was Apple in 2012. The risks are real and worth understanding. Hyperscaler spending can slow, and if Microsoft or Google pause AI capex even one quarter, Nvidia feels it immediately. China revenue is permanently 0 under current restrictions. In-house custom silicon is accelerating at every major hyperscaler, and the expectations treadmill means Nvidia must beat increasingly impossible numbers every single quarter. Here is the most important thing to understand after this earnings report. What changed? The stock price fell, and some investors are nervous. What did not change? $91 billion Q2 guidance. Blackwell demand described as parabolic, 75% margins, $80 billion buyback, and Jensen Huang calling this the largest infrastructure expansion in human history. The business did not change, only the sentiment did. The best historical parallel is Apple in 2012. Apple reported record iPhone sales. The stock peaked and fell 44% over the following year. Analysts called it overvalued. And then Apple went 10 times higher over the next decade. The pattern, market leader in a structural megatrend, Stock dips as expectations outrun near-term results, then resumes the long-term trend, is strikingly familiar. 3 investor situations. If you already hold Nvidia long-term, the thesis is unchanged. The business is extraordinary. Hold. If you are considering buying, history says post-earnings dips at Nvidia have been buying opportunities 3 times in a row. Size your position based on your risk tolerance. If you bought in the week before earnings, you paid the pre-earnings premium. Assess whether the business justifies holding. In every previous case, it did. 5 signals to track. First, does Nvidia deliver the 91 billion Q2 guidance? Second, Blackwell B300, the next generation, arriving late 2026. Watch for any commentary. Third, hyperscaler capex from Microsoft, Google, and Amazon. Fourth, any change to China export policy. Fifth, does 75% gross margin hold in Q2? These 5 numbers will determine whether the bull or bear case plays out. For anyone who watched our AMD special, this Nvidia result is the confirmation. AMD said data center demand surged 57%. Nvidia said data center surged 92%, and demand is parabolic. The 2 largest AI chip companies in the same earnings season, confirming the same thing. The AI infrastructure boom is real, it is accelerating, and it is not slowing. Step back and look at the scale of what is happening. Global AI infrastructure spending was $50 billion in 2023. It hit $300 billion in 2026. It is projected to reach $400 billion in 2027. Nvidia captures approximately 70% of AI chip spending. That is why Jensen Huang calls it the largest infrastructure expansion in human history. The numbers justify the description. The real lesson from this Nvidia earnings is not about Nvidia specifically. It is about how markets work. A stock falling after great earnings does not mean the business is broken. It means expectations were too high going in. Buy the rumor, sell the news is a predictable, repeatable pattern. And knowing it means you are not surprised when it happens. The best businesses in history all had periods where the stock dipped while the business kept winning. While we were preparing this AMD and Nvidia coverage, AMD hit a new all-time high of $481 on May 22nd. The Trump-Xi summit concluded. Warsh started its first week as Fed chair. The market kept moving. We will have the full catch-up on everything that happened in the next video. Drop a comment. What do you think Nvidia does from here? Does it recover to $1,000 within 3 months following the historical pattern? Does it consolidate sideways, or does it fall further before recovering? Tell me your thesis. I read every single comment. I am Marcus. Nvidia reported the most extraordinary earnings in semiconductor history, and the stock fell. Now you know exactly why, and what to do about it. Subscribe and hit the notification bell. The full market catch-up is next. I will see you there.